Hello everybody, this is Mr. Lu. The stock market has registered a phenomenal bull run yesterday night, and it's a very exciting recovery. And there are many reasons that lead to it. And more importantly, this trend is likely to continue. And I think that, there are all positive signs moving ahead. And let me share with you what are all these positive signs. And there's some important announcement I'd like to make. So make sure you watch until the end of the video. So the stock market has staged a powerful comeback after all the rumblings of the last 1 week or so. These are my usual disclaimers, not telling you about yourself. This is not financial advice. And let's go. So as an announcement, I want to share good news. A lot of you asked me to approach Mr. So Chin Heng. He's my financial guru for the last 20 years. He has been mentoring me all this while for 2 decades. And many of you have attended his course the last time where he did a course in a attempt to raise funds for the clinic in Myanmar. And everyone find the course very useful. A lot of you missed out on the course, and a lot of you all want some more details. I've managed to convince him after talking to him for quite some time to rerun this course again. So remember, click subscribe for more updates. The tickets will be released in a live stream, and if you miss it, it's gone. Okay, so click subscribe. So now let's get to the news itself. The S&P 500 has staged a powerful recovery of 2%. 2%. That's very strong. So the S&P 500 has hit 5,900 points. I think it's within a stone throw to hit back to 6,100 over points. And there are analysts saying that end of the year, you will hit 6,500 points again. The NASDAQ has gone up by 2.47%, which is almost 2.5%. That's a powerful, powerful recovery as well. The TLT has also staged a powerful recovery of 1.4%. So everything, bonds, stocks, everything has just gone up. So at a glance, all 4 major indexes have all gone up, recovering from all its previous week losses. And, more than 460 stocks have risen and only 33 stocks have fallen. And the consumer confidence index has risen as well. So this is a very interesting social media term called taco trade, right? Taco sounds like, something you can eat. But no, the tongue-in-cheek term is adopted by some analysts and commentators describing how the market tumbles on Trump's tariff threat only to rebound when he relents, right? So this is what he called Trump always chicken out. Okay, Trump always chickens out. So I already said, yeah, it's how xiao logic, right? Just every time hang, right? Play bluff and nobody believes him anymore. So now everybody is getting used to his nonsense. Though the stock market has jumped on Tuesday, with S&P 500 posting its biggest gain in weeks. The index jumped 2%, which analysts attribute to Trump's delay of a proposed 50% tariff on EU that he threatened just a few days ago. Remember, we ran a poll during live stream. That's why you all must always not miss our live stream. But we actually did a poll, and majority of us didn't believe that he will stay at this 50%. It's the complete hang and how sell logic. So they all talk about this taco trade. He always chicken out. And it is true, right? Then there was a delay in the tariff to EU. So the reasons for the strong rebound are manifold. Number one is there is a tariff delay, which is the main reason why there was a big jump. And more potential tariff reductions on certain countries is now possible. There is talks of a possible trade deal to be cut with India by this week. And that's a very good thing, right? So India deal among those that are close to the finishing line. And everybody now thinks that there is a lot less perceived risk in the stock market because of the trade war tension now relaxing. And there's, of course, an increase in consumer confidence. We have talked in the earlier slide. Positive signs like Q1, solid corporate results, okay, and a positive US-China trade agreement have all contributed to the increase in the stock prices. In the bond space, there's also some good news. The US and Japanese bond market is now stabilizing and more investor confidence going on. So the Japanese government is now considering giving out less ultra long-term bonds, ease concern about fiscal instability in Japan. Yield in the super long government bonds have now dropped, okay? And this is linked to dropping interest rate. So, and the Japanese Ministry of Finance is considering giving out less super long-term bonds because of the increased yield and low demand. So as a result, less supply means, there'll be less pressure on the yield. So the US bond also dropped below 5%. Now there are more confidence in the bond market. US Treasury market rose, especially those long-term, long-dated bonds, and it fell below 5%. It's the largest one-day drop since March. This is a very important news as issued by Besson, the Treasury Secretary. The Supplementary Leverage Ratio, SLR, proposed to be lowered for banks. This is a new rule that is coming out. You will encourage banks to hold more government debts and therefore, as a result, lower the long-term borrowing costs. Let's take a look at what on earth is this SLR. So the SLR is a regulatory measure introduced in 2014. It requires banks to hold a minimum amount of high-quality capital relative to their high leverage exposure, especially on and off-sheet balance sheet asset. So imagine this, right? If I hold a lot of bonds and things like that, I need to hold a lot of capital, right? This is just to make sure there's some level of balance. Now, this rule is set to be relaxed, okay, according to Besson. And with this relaxation that US Treasury Secretary Besson has announced, then the aim of this rule will help to reduce the capital burden on banks for holding low-risk asset like US Treasuries and central bank reserve. This move will encourage banks to increase their holding of government debts this will enhance market liquidity and potentially lower long-term borrowing costs. So this is a positive news for bonds. So, but there are people who say that this could still have some risk in the market. The banks may still avoid risky balance sheet exposure. So the reduced SLR might not raise bond sales, okay? And this might force government to change interest rate again, and which affects bond value. This has happened before the Silicon Valley Bank collapsed. The banks held on to a lot of treasury bonds, and the bonds value declined as interest rate raised to fight inflation. So then many of these institutions were forced to sell bonds at a terrible loss due to yield volatility. Bottom line is this: holding too much bonds for the banks is also a dangerous thing. Now the whole market is getting bullish. The VIX, which is the measure of the fear and greed index, how much volatility are there in the market, has a sharp drop. Okay, sharp drop means the market is less volatile, and that's a good sign. And markets are all bullish. There's a huge anticipation of Nvidia performance to be very good. Nvidia Q1 earnings has always been very strong, and is set to exceed market expectation despite a lot of government control on chip sale to China. So the US revenue is projected to rise 60% to $21 billion. Overall revenue expected to hit $43 billion. So this is actually quite a bullish news. And with Nvidia go up, all the other chip manufacturers, all the other peripheral businesses, AI, all this all goes up. So my key takeaway is this: at this juncture, I think the entire financial market don't believe in Trump's threat anymore. This taco thing is just house logic. So Trump can throw something in the market. I think the market don't really believe it anymore. And besides, all the latest news are mostly bullish. So the stock market are likely to stay volatile, but recovery to all-time high, in my opinion, is a matter of time, not a matter of will or will not. I'll still be cautiously optimistic because there is no conclusion in the trade war yet. Things can still happen. Trump can still cause a lot of volatility, but the long-term trajectory, in my opinion, will still be up and up and up and up, like what happened for the last 50 to 100 years, okay? So I'm going to be informing everybody of real-time changes. So remember, hit subscribe and don't miss my real-time alerts, okay? And I will see you again tonight or tomorrow. Okay, bye-bye. I'm now back in my favorite coffee shop. Okay, and they got really very nice food. Today, the boss introduced me to a very nice fried bee hoon. with lots of 猪油渣 pork lard.
一碗云吞你看嘛，对吗？
还有一碗云吞呢。好，谢谢你啊，我尝尝看。So the boss was very nice. Okay. Wow. The bihun is very soft, very fine. The 猪油渣 very in abundance. It's just super yummy. Now it's B's turn. Terima kasih ya.
My favorite, 猪油渣。
This is the fastest way to get heart attack.
Wow. The bihun is those kind of very fine bihun. It's very soft.
Super, right?
The taste is 很入味.
Great.
Very good.
ABC.
Of course A.
And this is barbecue chicken skin. Okay? And you, wow, look at this, man. Barbecue new chia. Okay. You got mala powder on it. Wow, super nice. 26 for, I can't remember, it's 26 or 16 ringgit or 16 6 or 20 ringgit anyway.